So the big question in real estate right now is how is the latest interest rates going to impact the Myrtle Beach market? I think it's a great question. I have a few answers that I want to share with you. I will tell you that there's nothing negative, at least from a local real estate market, that we see can occur because of lower interest rates. But let me get into what's going on in the Myrtle Beach market first, and then I'll kind of give you a little bit of thought on interest rates right now, and how it's going to impact the local market. Real quick, a snapshot on what's going on. The average price for residential homes along the Grand Strand is $457,000, $457,442. That is an increase over the last year, about 1.2%. Believe it or not, average price on condos is $264,000, which is about a 5% increase in a short period of time just on condos. Now, we know that there's a lot of condos on the market. I think the average price that we're noticing, that little increase, has to do with a lot of the bigger condos have been selling, so that's kind of pushing the average price up. Some of the smaller condos, they have not been selling, so like the efficiencies and whatnot, and some of those lower priced properties are not hitting the sales market, influencing the averages. That's my take on it. Month supply for residential homes, it's 4.2%, which means it's still a seller's market. The condo market, there's 7.9 months of supply, which really means, honestly, it's a buyer's market from a condo standpoint, unfortunately. So there are still condo owners that are selling their property, and you might be thinking, why would somebody want to sell right now? And the main reason is condo owners, their income has decreased, causing the condo to be a negative annual return. So they're losing money on an annual basis. So they sell it for $5,000 less than maybe they want to, but it saves them $20,000 of losses every year. So when people wonder, like, why would a condo owner sell, at a lower price? It's because they're losing money in the negative cash flow, and it makes sense financially just to get rid of the loss at even though there might be losing a few $1,000s on the sales price. Pending sales are looking strong. There's around 982 properties, residential homes under contract. With condos, there's about 442 under contract right now. So that's really good. And the last number that I'll give you is days on the market. Just looking at my notes here, residential homes, there's been no change. It's around 118 days on the market. And for condos, it's about 139 days on the market, which represents around a 21% increase over the last year. So interest rates. The Fed decided to lower the interest rates just recently, actually yesterday. Now, that doesn't mean the interest rate at the bank necessarily went down, but it does mean that banks can borrow money at a lower rate, which means they tend to pass that savings on to the consumer. Now, how is it going to impact? I can just sum it up very easily for buyers. Buyers are able to buy more home right now for the same amount of money. Or buyers are able to buy the same home that they could have bought yesterday, but pay less money. Now, what's important is that doesn't mean prices are going to go up or prices are going down. What that means is the cost of borrowing money is decreased. So when you look at the overall cost of real estate, the affordability side of it, a lower interest rate makes it more affordable. So people can buy a little bit more, or they can buy the same thing they were already looking at, and it's more affordable because of the cost of the interest rate, the cost of the mortgage, meaning they're actually going to spend less money on real estate. So that should bring a few more people into the market, hopefully get some of those buyers that have been waiting, get a few of them, off the fence. The Fed's alluded to maybe, decreasing the interest rate again. We'll see. We've been hearing that for years, right? So I'm skeptical, or I should be. I'm cautiously optimistic. How about I put it that way? Now, sellers, from an interest rate standpoint, sellers or property owners, I would say this. It's always good when interest rates come down, because that could fuel demand, which means a home could sell faster and a home could maybe get a few more dollars. Maybe it can sell for a little bit more money if demand really was to push forward pretty aggressively, increase aggressively. The other thing that people are forgetting, though, is that interest rates are now starting to get to the level where people can refinance. Now, not everybody can refinance, but if a property owner, if you had an interest rate of, say, 7% or greater, there's a high probability that you can get into the fives right now. I have seen people being approved under 6% into the fives, right now. So especially if a homeowner had PMI, they have to pay the private mortgage insurance, and they had 7+ interest rate. Well, that person, if they can get under 6 and eliminate PMI, they're going to save hundreds and hundreds of dollars on a monthly basis. So those are the things. That's the way that it impacts the local real estate market. If you need any help buying, selling, just like to learn a little bit more about what's going on in the market, or have questions regarding your specific property and what it might be worth, please reach out to me. I'm Greg Harrelson, Century 21, the Harrelson Group. I hope you enjoyed this update. We'll talk to you soon.